Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for Thursday, May 31st, 2018, the last trading day of May. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Right now we are mostly trading around that 2703 key level still. I've continued to talk about that key level ever since the beginning of February, the first week of February, where we found that Feb low and bounced back to 2703. Ever since then, it's been a very sticky level, very magnet-like, and so again we continue to chop around that level. Overall, we still have an upward sloping bias. We have hit quite a bit of resistance in the 2740s, but above that zone has clear air to at least 28 to 2830. So there's some clear air above, and the fact that we have just seen a push below 2700 that was trapped and reversed suggests there could be much more upside ahead. Now, I would not be surprised if we pull back into 2700 at least one more time, 27 to 2703 at least one more time, maybe a couple of times before we see perhaps a continuation. We do have non-farm payroll tomorrow morning pre-market that could add a little boost to the market, but for the most part, as long as price continues to hold 2700 from here on out, we could be looking at 2800 down the road, so that could bode well looking forward. If we take a look here at the NQ, you'll notice the NQ continues to be quite a bit more bullish. This one's been in a much more bullish slope, even recently here, while the ES was taking out lows and closing below lows. This was still way at highs, and we are just barely away from seeing a big squeeze in this one. And again, above 7K opens up 7,200, maybe even as high as 7,300, at which point we'd then look to see if there's any acceptance, because any failed acceptance above 7,200 would rotate this right back down towards 66.53. So just looking outward several weeks in advance, but for right now, if we see a push above 7K, we could start to see this thing rally towards 7,200. Any failed new lows could also be a catalyst for another round of strength. Alright, now the one thing that would lead to major rejection would be if this thing were to push above 7K, rally into 7,100, but by the end of the day close back below 7K. That would be significant, and all tides would change to 66.53. That's where we'd be looking as a target. Alright, now taking a look here at crude oil. Here's a look at crude. Now crude has been actionable all week, and we talked about this one right here being the low, 65.80, and again we mentioned that day you'd like to see absorption between 66.29 and 66.50. You'd like to see that continue into the next day, which it did, and then we saw a stop run day develop where this thing tore through that zone. Now we're seeing a retest of the stop run zone, and now this zone right here between 67.50 and 67.60 offers the ideal area, even as low as 67.47, for bulls to come in and defend ahead of the potential continuation into 69.35 and even as high as 70. So what we're looking for is for this area to hold for the next day or two, and that could lead to a squeeze. And again, before we were talking about 67, 69 half as a call spread that you can do. Even from this territory, if you missed out on that, there's still a 68, 69 half, which right now is very, very cheap, and getting cheaper as this thing pulls back. So again, still various ways to get in on this type of behavior to come. But if there's any close below 67.47 today, if price closes back below that zone, you have to kind of reload and see how that thing plays out. Overall, we still believe that this is the pivot low, which means as long as that 66.29 zone continues to remain intact, more upside is likely to be seen, but below this mid does open up some potential to get better prices lower. Alright, let's take a look at gold here. Here's a look at gold. We talked about 12.95s being the key level here. That's this level right there, 1295s, and upon breaking through the top of it, any pullback to that zone was going to be a buying opportunity for a continuation into 1325, 1326, and so far that's been played out perfectly. As it got to a low of about 1296s, bounced, and then after that I mentioned that 1300 was the level to absorb, and 1300 was absorbed yesterday, and it was the absolute low yesterday during the session. And so far we see continuation to the upside, higher highs, higher lows, and continues to hold above 1295. That all points to more upside ahead. If this thing can just start to negotiate prices above 1310, it really opens up at least another 15 to 20 handles of upside potential here. So keeping an eye on gold. Any failure to hold 1295s would be significant, and that would likely lead to a significant stop run day well through the previous lows of 1280. Alright, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck and trade well.